If you want to truly understand U.S. taxation, whether you are a tax practitioner, business owner, freelancer, accountant, or someone preparing taxes in the United States, this lesson is for you. Today, we are discussing one of the most misunderstood areas of IRS dependency law, the qualifying relative rules under the Internal Revenue Code. Many taxpayers incorrectly assume that the rules for a qualifying relative are identical to the rules for a qualifying child. That is completely incorrect. Under IRS dependency law, a qualifying relative follows an entirely different compliance framework. To determine whether an individual qualifies as a qualifying relative, the IRS primarily analyzes four major tests, not a qualifying child list. The individual must not already qualify as another taxpayer's qualifying child under IRS rules. This is the foundational dependency screening test, gross income test. The individual's annual gross income must remain below the IRS dependency income threshold for the tax year. This threshold is adjusted periodically by the IRS and plays a critical role during tax return preparation and dependency verification. Support test. The taxpayer must provide more than 50% of the individual's total financial support during the year. The IRS carefully evaluates support categories such as housing and shelter, food and groceries, medical and healthcare expenses, utilities and household expenses, clothing and daily living costs, transportation and financial assistance. This support calculation is one of the most important areas during IRS dependency analysis and tax compliance examinations, relationship or residency test. This is where many taxpayers become confused. Under IRS law, certain relatives do not need to live with the taxpayer to qualify as dependents. Examples may include parents, grandparents, uncles, aunts, nieces, nephews. However, for non-relatives, and generally for cousins, the IRS usually requires the individual to live with the taxpayer for the entire tax year to satisfy residency requirements. This single distinction creates thousands of filing errors during tax season every year. Understanding qualifying relative rules is essential for dependency taxation, filing status determination, tax credit eligibility, IRS compliance strategy, advanced tax planning. A strong understanding of these rules separates basic tax preparation from professional-level tax knowledge. Subscribe to our channel, press the bell icon, and share this with your network so more people can properly understand U.S. taxation and IRS compliance rules. YouTube, youtube.com/Shakil. LinkedIn, linkedin.com/Shakil. Contact 0322-9409. Qualifying relative IRS, U.S. taxation, tax planning, CPA, tax education, accounting, finance, tax law, IRS rules, USA taxes, dependency rules.